This is the Ellis Martin Report. Join Ellis now for a conversation with Ali Haji, the CEO of Ion Energy, trading in the U.S. on the OTC as IONCF and on the TSX Venture Exchange as ION. Ion Energy is committed to exploring and developing Mongolia's lithium salars, which includes the Babaol and Erganaran project. Ion's flagship 81,000-hectare Babaol Lithium Brine project represents the largest and first lithium brine exploration license awarded in Mongolia. Ion Energy is well poised to be a key player in the clean energy revolution, positioned well to service the world's increased demand for lithium.
Ali, welcome to the program. Nice to have you with us today.
Thank you, Ellis. Pleasure to be here.
If you don't mind, give us an overview of your company.
Of course. Ion Energy is a company that I co-founded in August 2017. We looked for lithium in Mongolia on the back of a visit to Mongolia to close a transaction with Centerra Gold for a gold company. We saw lithium as a commodity that would come back to sort of flavor of the month, but also more importantly, it is cyclical in nature, much like every other element. And so we looked at Mongolia based on the geology. We found some similarities compared to Mongolia and the LATAM sort of lithium triangle. The endoveric basins that exist in Mongolia are very similar to those that exist in Mongolia as well. And so what we opted to do was find a company or co-found a company that would look for lithium in Mongolia. In 2017, we started our journey. We looked at a few different archives in the Ministry of Mining. We then found that there was some work done in the southern bit of Mongolia looking for lithium. We approached the government in 2018 to put up a license for tender, Babaol, our flagship license. They then put that up for tender in 2019. We were awarded that license in January 2019. And as our viewers or listeners can imagine, lithium was not flavor of the month. It was very much a cannabis year. And so we sort of held on. And in August 2020, we went public on TSX Venture, our ticker ION, with Babaol as our flagship license. So we now control 110,000 hectares in country in Mongolia with a team that comprises of Mongolian directors as well as internationally accredited mining individuals. And we've been trading for about 22 months now.
And for our listeners, I'd like to point out that equates to about 1,100 square kilometers of a footprint in Mongolia. That is very, very significant. And another point I'd like to add, and perhaps you can expand on that, is you are very, very close to major end-user countries, not only China, which is big, but South Korea, Japan, and all of Southeast Asia.
Yes, absolutely. Babaol is located 23 kilometers from the Chinese border. Erganaran, which is our secondary asset, was awarded last year, is in Dorngolbi province, which is ultimately the major artery into the Chinese sort of behemoth that is the consumer today. China, as you rightly mentioned, consumes 53% of the world's lithium. They refine and produce about 80 to 83% of the world's batteries that end up in vehicles around the world. But the Koreans, the Japanese, there's a lot of sort of manufacturing capacity being brought online. CATL very recently announced a massive investment of $3.5 billion in Indonesia to help build batteries there as well. So yes, absolutely. These individuals or these conglomerates continue to import the vast majority of their lithium from LATAM, 15,000 nautical miles away, or alternatively from Australia, which continues to be a fair bit of a distance. So for us to be in the middle of Asia, exploring for lithium, finding very favorable or encouraging results at these early days is obviously something of interest to us.
I hate to compare your properties with those in North America, but I guess I'm going to anyway. It's just so much more economic if you're that much closer to the end users than, let's say, you are in the Clayton Valley in Nevada or in Canada, for instance, right?
Yeah, I mean, absolutely. You look at labor costs in Mongolia. Mongolia's GDP is primarily driven by mining. The vast majority of their exports are mining related. And so you have enough skilled labor in country to allow you to advance your projects at a price that would be obviously at a massive discount relative to those that are operating in the Americas. So that's obviously a big sort of win for us in that regard. But I think it's important to note that we're giving sort of Mongolia an opportunity to become a manufacturer or even a refiner of battery metal. And that's important because Mongolia historically has been, since the Industrial Revolution, been burning coal for their energy requirements. And so to bring a clean, green energy metal to the environment as well as the economy, I think will bear fruit. Beyond that, I think we can continue to be very competitive with respect to our labor costs in country. And as you've rightly pointed out time and time again, our proximity to market.
What kind of relationship do you have with end users at this point?
We've been having some conversations, of course, given our proximity, as we highlighted. We've had some conversations. I brought on Wendy Lee, who was part of the Noble Group. She's a commodities trader that worked primarily in coal, copper, and gold space between Mongolia and the Asian markets. She also worked at South Gobi Resources, so she has a fair bit of experience in Mongolia. And as far as the end users are concerned, that there are multiple different end users, if you will, but there's also the refining capacity. So you mentioned earlier, what is relative to Nevada or the Clayton Valley deposits. Those are primarily clay deposits. Clay, as we know today, has not had a commercial operation in place to bring the lithium out of the clays. There are multiple pilot programs that exist that allow you to refine to a certain capacity, which will ultimately end up in batteries. But it's important to note that the scalability of these very pilot phase operations is not quite there yet. Now, will it be there? I think, you look at your iPhone, it does things today that it would not have done 3 years ago. So yes, scalability and technology grows exponentially. And so with respect to what we have at Baba-Ayol, that's very much a clay deposit. It looks like a clay evaporite deposit on surface. There might be brines beneath surface. Urgat-Naran has brines beneath surface that we're looking to ultimately bring to market. But I think to answer your question, I think where we reside in terms of technology, as well as the potential for these assets to come to production alongside the quite significant technical team that we have, makes ION a story that hopefully our listeners would follow.
How are you financed for all the capital expenditures that you have to make over the next 12 months? And then tell us about your share structure, please.
Of course. We went public in August 2020. We raised $2.7 million at a 30-cent price with a 40-cent warrant. We have since then acquired an additional asset. We've spent a fair bit on exploration. And then last year in March, we closed a bought deal with PI Financial and Stifel GMP. That was quite important to sort of shore up the treasury, but also give us enough run rate to last for a number of years. So we raised $5.75 million at 50 cents a unit with a 70-cent warrant. We had some institutional names come in, including funds in the US, such as US Global, Ralph Aldis and the team down there. So thank you for your support, as well as different individuals that came in from the Canadian market and otherwise. So a lot of institutional money that's long and sticky, management insiders leading into the cap table, control about 25% of the company. So with $3.7 million at the end of this first quarter in 2022, gives us enough capital to continue to explore in Mongolia for at least the next 18 months. So we're very well funded. We're not looking for equity at this time. We continue to execute on our exploration activities. And given the market sentiment today, Ellis, as you know, raising capital for a junior miner would be quite difficult. Thankfully for us, we do not have that problem. So we are well funded.
I understand you have some drill results you'd like to share with our audience.
Mongolia is a nation that has had a vast amount of experience in terms of exploration for mineral resources. It's 1.5 million square kilometers, which only 3% has been properly explored. Oyu Tolgoi, which is owned by the Rio Tinto Group, as well as Turquoise Hill here in Canada, has the third largest copper gold deposit on the planet in Mongolia. As far as we're concerned, brine and lithium is something that is quite new to Mongolia. We are first movers in the lithium space, and as a result of that, during the pandemic, we were unable to really advance our projects to the same level or same ability that we have seen in LATAM, where you have that skilled labor that understands lithium. So what we did as a company was explore Baba-Ayol, our flagship license, 81,000 hectares. We drilled over 300 holes on that asset. We were able to find anomalies of up to 1,502 ppm, which we called the White Wolf prospect. And 1,502 for our listeners is quite significant. That essentially means 1.5% lithium in the ground. If you compare that to Greenbushes in Australia, that's 1.2, 1.4, and that's in commercial production today. So a very massive sort of anomaly found in Baba-Ayol. More importantly, now that the country is open to visitors as well as expats visiting the country for exploration purposes, earlier this year in March, myself and my technical team, which consists of Dr. Mark King, who was the qualified person on file when Neo Lithium sold its last year for $960 million. Don Haynes, who is a qualified geologist that's worked on both the brine as well as hard rock assets around the world, accompanied me to Urgat-Naran, which is our secondary acquisition earlier this year, or earlier last year, I beg your pardon. And we were able to traverse the entire project. We were able to do over 90 kilometers of TEM geophysics. We were drilling 73 holes down to about 12 meters over the water table, or whichever came first. But very excitingly for us, we collected brine samples on surface with a grade of 918 milligrams per liter. If you were to look at any of these majors that are now trading in various hundreds of millions or in billions, if you will, these are the kinds of results that they saw very early days. So we're very encouraged. We remain encouraged. We have a massive exploration program that's underway over the course of this summer that will include deep holes down to about 200 to 300 meters, maybe 500 in some places, but ultimately allows us to measure the flow rates, understand our early resource indication, and as we discussed before, bring in those strategics for a toehold in the organization, leverage their intellectual capacity, and capabilities to ultimately understand how these assets go to production.
Well, it certainly does sound exciting and aggressive, by the way. I haven't heard of anything that aggressive in a long time. And I guess that's due to really how easy it is for you to get things done in Mongolia, isn't it?
That's exactly right. And I think, we've sort of held back on going full throttle as a result of not having access to country. But geologically speaking, having reviewed exactly what is in the ground, as well as how it compares to those assets around the world, now that we have the opportunity to get out there and ensure that the folks are doing things right the first time around, as opposed to using shareholder capital, a program that might not be successful.
By restricted access in Mongolia, I assume you're referring to COVID, correct?
Yes, that's correct, Alice. I think looking at Mongolia, unlike any other place on the planet, there were travel restrictions put in place with respect to who can visit those countries, what sort of vaccine requirements you needed, but also borders were closed early days with respect to ensuring that COVID does not sort of spread. And so Mongolia was very much the same. There was a lengthy quarantine period that was not feasible for myself or my technical experts. And as a result, we worked with our in-country team, which is a fantastic team that's worked on exploration projects in Mongolia across different resources. And we just opted, as a result of the lack of skill set with respect to lithium exploration, to hold off and conserve our capital until we had access to country. So you look at supply chain issues around the world. I think, anybody in the US today that's trying to buy a vehicle, you're probably aware that you have to wait. The dealerships will take some time before you get a vehicle. And Mongolia is no different. And so now that the countries are open and we have access to country and we can travel quite freely, I believe, we're ready to advance the funds that we've raised and really do some damage with respect to exploration. I think we have a fair bit to share with the market in the coming months. And thank you very much for the interview, as well as thank you to our listeners for following our story.
Well, I'm certainly pleased to be able to introduce Ion Energy to our audience in North America and globally throughout the world. And I thank you, Ali, for joining us today in the program.
It's been a pleasure, Ellis.
Ellis has been speaking with Ali Haji, CEO of Ion Energy, trading in the U.S. on the OTC as IONCF and on the TSX Venture Exchange as ION. Learn more. Head to the company's website, ionenergy.ca. That's ionenergy.ca. This is the Ellis Martin Report.